we're going to start our very first session. So, hi, my name is Cody Smith. I am an options trader. I have been doing options trading since 2016, and I will post my historical profits and success rate. I've learned a lot over this journey, and I'm here to share that with you and hopefully solve some of the problems that you may be running into. Um, Sometimes a fat premium looks really nice, like selling a put contract right at the money and making like $1,000. And sometimes you can totally do that. That's the right thing to do. But as I've learned over time, it's usually not the most profitable way. So we're going to go into how to make the most out of your money. And just like everything else, as an options trader, you got to worry about risk management. Everything is about risk management here. So everything that I'm going to share with you is not financial advice. It's just what I do, and you can take that and learn from it and form your own strategy, of course. Um, so yeah, we're gonna go ahead and get started. I've got the chart up here. I'm still working on this video. So we're looking at SPX at the moment, and I like SPX because if you are going to trade options, then SPX, XSP, and other European style options give a nice tax advantage. That's one of my favorite things about it, um, because it's a broad market index. It moves a little bit slower, and well, as slow as the SPX, or as slow as the S&P 500 moves, I guess. But the tax advantage here is gains or losses from this are 40% short-term capital gains and 60% long-term capital gains. So if you're an options trader, one of the biggest pain points is when you sell premium rapidly. I mean, that's day trading and you're paying standard income rates. This helps that. So if you have a high income outside of trading, this is a pretty good way to offset it. Now, if you take losses, you've got to offset those losses with capital gains, um, short term or long term, to make it effective. But let's not take losses. That's why risk management is here. So that's what we're going to talk about. If you would please go ahead and subscribe, because I'm going to be posting videos every day for strategies that I'm working on. So yeah, getting into the chart here, we've got it was an interesting day today. Over the weekend, the U.S. and Israel decided to bomb Iran, and uh, I don't like war. I'm not taking a position in this video about whether it was a good thing or a bad thing. We could save that for a whole nother channel. But what does happen is when war happens, usually you see big gaps in the market, especially risk off. So in this case, over the weekend, whenever I saw the bombing, I was just like, oh, okay, well, I'm glad that I put in protection. I kind of wish I would have put in more, but let's see how bad is the risk. So I looked at several other bombing scenarios, like Ukraine war with Russia, and other like when Trump bombed uh, the nuclear facility, or what did he say? Totally obliterated the nuclear facility in Iran. Just, I think it was in 2025. Um, what happened? How much did the market react? Surprisingly, not that much. I mean, it reacted. We're talking a couple of percent down. Looking at SPX, I mean, if you were in like TQQQ, that's a different story. That's triple leveraged. So, yeah. As I was going into this morning, I looked at open, and yeah, we got a big gap down. So it was peak in a day. Like it closed at 6877, and then we gapped down like 6796. That's a pretty, yeah, it's not small. Uh, and so at least it was expected. It wasn't a huge surprise. It's not so massive. I looked at Asia trading like overnight while I was kind of trying to figure out what my plan for this morning was going to be. And it really, it seemed not too bad as far as like the amount of risk that we were going to run into. So yeah, it wasn't as bad as I thought, and it totally recovered. I put on protection like right here, and I bought some SPY put contracts. It was a in this case, it was a bear put spread because I didn't want to risk a lot, but I wanted to capture some downside move, and so I did a bear put spread on this, and I did it on SPY, not SPX in this case, because I wanted to pay a little bit less, and I wasn't too worried about the tax advantage for this very short term duration, and I got in here. It gapped down. It gapped back. It went right back, and I ended up selling it somewhere in this neighborhood because it went up and then came back down and then started to go up again. I was like, I think that this is going like whenever this red candle wasn't so strong, I was like, I think the protection's done. We can go ahead and go. We can get rid of it for now. And yeah, it totally went up from there. Now, is it going to stay up overnight? I don't know. My strategy, as you'll come to find, I bet on not knowing what direction it's going to go, and I make money that way. And so that's what we're going to talk about. Is yeah, you could be directional, and sometimes, very rarely, am I betting directionally. The way that I like to play it is you make money over time, and whenever something moves hard in one direction, you capture the premium on the other side. I use a lot of iron condors, and so you capture premium on the devalued side, and then you leave the other one open, the one that has lost money. So what like an example would be, and I will show an example of this as well. I don't have that screen open, but I'll add it to the video. If you have a call vertical and you get a huge downward move, then the premium for the short call is going to be collected. Basically, you can close that short call position because it will be devalued, or it'll be devalued significantly. You can leave the long call value open if you think it's going to rebound quickly, because if it rebounds, then you don't really pay much premium like theta, and you can get kind of double profit that way. If it goes the other way, you just do the opposite on the other side. And yeah, so it's sort of just a constant rebalancing, let the market tell you what it's going to do, and collect premium on each one of those bounces, and trying to stay as delta neutral as possible. That way the move doesn't matter. You just continually collect premium and continually adjust your position. Now I have strategies for hands off, like pretty hands off, where you don't have to attend it all day, because I started trading while I was full-time software engineer, and I didn't have all day to trade. I couldn't sit there and just watch it all the time. So we'll go over two different approaches, one which is very hands-off, and one that is active management, where you can kind of scalp throughout the day, even staying delta neutral. And so that's kind of cool. All right, so based on this, what my entry position here is, I did an iron condor for 21 days out. This is not my expiration date. This is just an example. I wanted to use Yahoo Finance because everyone has access to it. You can look at this. And my strategy is that the price is going to stay within my boundaries. And so my boundaries are um, really far. So it's even way farther than this. I can't even zoom out far enough. So I have a short put and a long put. So in this case, it's a bull put vertical and a bear call vertical to form an iron condor. And that iron condor, as long as the price stays within the range, in the range, I think the upper bound of my iron condor is, I think it would start to breach the short position at 7,150, if I remember correctly. I'll have to go look. And then the lower bound is below 5,000. The position is really close to delta neutral, and it collects theta every day. So I'm just collecting premium every day and keeping an eye on it. That way, if we get close to taking a loss, then I can stop it out early, or I can roll it forward, like roll it to give it more time. But yeah, that's the core of the strategy for tax advantage. I use this one as sort of a steady cash cow type of play. It's not the only strategy that I run, but it is one that just churns profit continually, and it scales pretty well. So you can scale it up or down depending on how much capital you have to use. This may not be for everyone, so yeah, just take it for what it's worth, and we'll go from there. So I'm going to have to cut out a lot of this video, so we're going to go into different things. All right, I guess that is a wrap for now. So if you could, I would really appreciate it if you subscribe to my channel. There will be new videos. I'm going to try to post every day and do commentary on the beginning of the market open. And I'll give what my trades are going to be. And I might even start doing live streams so that you can see me trade live and follow along if you want. Yeah, so like, subscribe, and I will see you tomorrow.